Good morning, everyone. Thank you for joining us today. My name is Rachel DeGrand, and I help coordinate the webinars for Houseman Johnson Insurance. I would like to welcome you to our webinar this morning, Beyond Bonds, How the Surety Underwrites Your Business. I have just a few housekeeping items before we get started. This webinar is interactive and will feature a question and answer session. You can type a question in the questions feature and we will address it after the presentation portion. Once the webinar concludes, there will be a short survey we hope you will complete with your feedback. This webinar will be recorded and will be available on the webinar archive section of our website. Each attendee will receive a follow-up email with a link to the recording and the presentation slides. I would now like to introduce you to our presenters this morning, Pat McKenna and Dave Zanobi. Pat has been with Houseman Johnson Insurance since 2007 and oversees the Surety Department and the Construction Industry Group. He has been in the surety industry for over 27 years, including 13 years with the top 3 national surety underwriting companies. He leads with a focus on client relationships. By breaking down risk factors and demonstrating how they will be handled, he is able to help surety clients maximize individual job size. Pat also uses his expertise to help clients maintain a strong bond relationship during times of transition. Dave Zanobi has been with Houseman Johnson since January 2018 as a surety consultant in the construction service group. He brings over 20 years of accounting and finance experience in the construction industry. His clients range from small plumbing contractors to real estate developers and multinational contractors. Dave focuses on what his clients need and finds solutions to their individual situations or problems. In addition, he serves as treasurer for Associated Earth Movers, a position he has been elected to by his peers for over 10 years. Pat and Dave have a wealth of information to share on this topic, and we're proud to have them present to you today. Good morning, guys.
Good morning. Welcome. We're glad to have you here. What we're going to start out with is going through a little bit of the economic outlook. Much of that everyone is very familiar with. Then some financial considerations to be aware of that you should be working on and that the surety and all creditors are actually looking at. Then going into project considerations, talking about underwriting concerns, and then we'll finish with a question and answer period or session. So starting in 2020, going into 2020, 2018 and 2019, we had a very, very strong stock market. Unemployment was really low. Apartment construction market was extremely strong. Construction backlogs were always very, very strong. They typically went out for 6 months and then were concerned about, okay, where are we going to get to work after 6 months? But it was always there. It always came up. Public work was very strong in Wisconsin. Expectations going into 2020 is that construction was going to continue being strong, with one caveat. Manufacturing was slowing in the fourth quarter of 2019. And that was a little bit of a concern. We'd had some concerns about inflation from time to time. The Fed took care of that with some of their actions. And in 2020, in the first quarter, things were continuing to go the way they were in 2019. We had a little bit of a up and down on the stock market, but for the most part, the stock market was really strong. Private construction was going very strong. Manufacturing did continue to lag, and again, that was one of the indicators that was a bit of a concern. But everything was really great until February. And then we saw this, and a huge decrease in the stock market. February 19th to March 23rd was the worst stock market performance since Great Depression. 3 of the worst percentage losses at close in Dow history, 2 of the 5 worst percentage losses. The red are that period. And as you can see, going back from a percentage standpoint, we had the 2nd, 5th, and 13th worst. It was pretty bad from a percentage standpoint, seeing how if you looked at from a pure dollar standpoint, we had 7 of the 10 worst daily losses and 12 of the top 20. And this slide here is that same representation, except for in the green, that is when we were coming out of this period that was the downturn. So as you can see, that most all of that in terms of the point total happened in that 1 month. Very tumultuous time. The feds took action. We had the coronavirus aid relief, the CARES Act. It was designed for both employees, employers, and also provided some other reliefs such as loan protections and loan pausing, if you will. The big one that impacted most contractors was the Paycheck Protection Program. We'll get into that one a little bit later. But starting on March 24th and going through, I ended it last Friday. I should have updated it, but I didn't. The stock market regained. We went from 18,591 as of March 23rd up to 25,605. 29,358 was the peak, so we regained most of it back, and that's the trend back. Now, as you can see, again, while we're increasing, there were still some negatives in that period of time. But starting with March 24th, we had 3 of the top 10 point gains and 7 of the top 20 point gains. And then again, going from the turbulence that we were talking about earlier, when we were going down, we still increased from February 19th to March 23rd. The red are the increases in that period of time, the daily increases. So as you can see, again, it was just a real tumultuous time. Everybody is aware of that. I mean, the value went from 29,348 down to 18,591, lost 37% of the value, regained 24% of the value. And everyone's been talking about a V-shaped recovery. The market is showing signs of that. Hopefully it continues, but there's still a lot that is going to be problematic and concerns. So with the uncertain outlook, like the creditors and underwriting, the thoughts that they have right now is, construction being an essential business was a huge positive. Contractors were able to, for the most part, continue their work. There were some glitches. You did have some projects that were delayed, some projects that may have been suspended, some projects that may have been canceled, but most of the backlog was able to continue. The new work is in question. We'll get into that one a little bit later. The PPP funds were a huge benefit as well. That provided a lot of cash flow at a time that contractors needed it, because there was some concern about where would the money come from. One thing that I would say with the PPP funds, depending upon the underwriting company, the bond company that you're with, they are treating those a little bit differently. Some are taking a very conservative approach and considering them as debt until you get through the loan forgiveness phase. Others are giving you some credit, not full credit. It all depends upon, one, the loan forgiveness phase and if they're turned into grants or what remains as debt. So some are, as I mentioned, are being very conservative in that regard and just treating it all as debt at this point. Still, it's a positive because it's a cash flow event, and that helps the cash flow whichever way you look at it. Unemployment provides a new potential pool for employees. Going into 2020, the biggest complaint we would hear about from contractors is the work's there, they just don't have the people to do the work. With all the shutdowns that we've had and businesses that are going out, the unemployment market has skyrocketed. It's not expected to go down to the levels that it was going into 2020. So there may be some people that may be looking for new careers, something a little bit more long-term in their future. So I just, say that it's an area that you should be looking at to try and groom some future employees. You might be able to find some good diamonds in the rough. I was talking to some of my clients recently, and they said that sort of in a twofold form. One, the applications are up dramatically for job applications, but they're not able to hire a lot of them because they still are getting the big benefit from the $600 per week on the unemployment, which has made it financially a little bit more difficult to get them to leave. But that is going to be coming to an end unless it is extended July 31st. So, I would still say that there is a good pool out there. The fourth package that they're talking about for the relief, who knows where that's going to go, what direction it's going to be. One thing that I would say is that the President and the Senate and even the Congress have been talking about infrastructure and putting money into infrastructure. I don't think you're going to see the governments building buildings much, but I do think that they will find ways to get either tax credits for private development or money into the state and local governments for construction, because as being an essential business and ongoing, they look at it as an area that will be able to take some of the unemployment and employ those people and get the economy going back and in a positive direction. Plus, when you see cranes out, when you see vehicles out, it does put a different perspective in people's eyes. They think, okay, we are progressing. So I think we add those things together, you will see money going into the construction area. How much? Don't know yet, but I do believe that we will see a fairly decent outlook on that. So coming off of a very strong construction market, another positive was that everyone's balance sheets were fairly strong. Yeah, different industries might have had some issues. If there was weather-related problems, there may have been losses. But for the most part, everyone still had a fairly strong balance sheet. They were in a manageable leverage position, the nice backlog of work, good profitability. Everything was looking good. So from a positive standpoint, we haven't really seen much change or impact from the underwriters other than additional questions and looking for the future and questions in that regard. But they're still very supportive in what the programs and needs are, and it's all because of the positives right now. The concerns, again, most of these concerns are looking forward because we've not experienced a lot of them yet, except for we do know they're coming. State revenues are projected to fall dramatically. With all the shutdowns, you're not going to have the taxable income to be able to generate the tax receipts that the public lives on, or the public bodies live on. So we're expecting to see some decreases. We have seen, that the governor has already announced that there's going to be reductions in budgets up to 20%. The DOT has cut, scaled back their program pretty substantially. The building program is being looked at. Everything is being looked at. We know that is coming, but we're still seeing a fair amount of public work being bid. So everything is still continuing to go. We just know that there's going to be something that's going to hit us in the future. How do we pay for the $3+ trillion in expenditures? It's $3+ trillion now. Whatever the next phase of the package will only be added to that. Eventually they're going to have to come up with the revenues to pay for that. We can't just keep pushing it down the road. Revenues will take away from the ability to prosecute work. So, again, that's looking at the future, probably more into next year than this year. But that's a concern that underwriters are looking at. And where does the stock market go from here? We just showed how turbulent it's been in the last 4 months. We're in an election year that usually creates enough instability in the market as well. So it's anybody's guess. But right now it's rebounded pretty strongly. Hopefully that continues. Project integrity is a concern, as I mentioned. We've seen delays, we've seen suspensions, we've seen cancellations. Expect to get those questions on a fairly regular basis. If you're looking at a larger job, a larger program, or you're just having an annual meeting with your underwriters, you might have that question asked just because they just want to keep on top of it, know what your backlog is looking at, know what impact it's going to have. And then the future work, this is anecdotally, but we've been hearing from architects that they've slowed down. They're not as busy as they were. And that's always a lag effect to us. Many articles by trade magazines are projecting that construction starts from June 30th through at least the first half of next year are going to be down substantially. Anyway you look, it could be from 25% to some doom and gloomers are 50%. Don't really know what it'll be, but we do expect that there are going to be some reductions in projects that are out there. As I mentioned, state budgets have been cut. What impact will it be on the private market? I've heard some private owners have pulled back projects. Some have delayed projects because they want to, re-engineer it. Some are looking at it that with social distancing may be a part of our future, at least for the next several years. So they're looking at trying to make modifications to their buildings to make changes. So you may see some additional work in that regard, but we don't. I mean, it's a huge unknown as to what is going to happen until we really shake out of the whole COVID-19, and then future outbreaks. What happens? Are we going to see another shutdown? Will there be an appetite for shutdown? What type of reaction will that create, both from the public and from the market? And obviously the stock market doesn't like all the strife going on and the infighting. But as we saw with all the protests and the riots of recent, with everyone out there, the government's allowed that, and so there's been I've heard a lot of businesses saying that, well, they better not shut us down. So I am concerned if there is another shutdown, how negatively that may be viewed by both the private sector and by the stock markets. This is a representation of a typical surety marketplace, and this cycle takes many, many years. It starts with a really what we call hard market on the bottom, where very bad results have created a change in your terms, higher rates, less capacity from the surety industry. We were at the very top going into 2020, where we were having their very favorable surety results for many, many years. Coming out of the recession of the 2008 through 2010 period, there was a lot of concern that we were going to start going on a down cycle with some surety losses, but that never happened. I think a big reason why that never happened was there was not enough employees. So contractors never got stretched too far, because the one governor holding them back was they wouldn't take the work if they didn't have the people to do the work. The financial statements then were able to rebuild the way that they normally should. There was an expectation that at that time we would be in a down cycle, but we weren't. We stayed right about where we are. Now the only question is, where do we go from here? And that is such an unknown. If things progress the way that the president and his economic policy advisors are saying, we might stay where we are, but who knows? We could be seeing some increase in claims activity, which would then start a new cycle of contractor sureties exiting the marketplace and hardening the underwriting terms and all. So just something to be aware of, and just you may want when you have an opportunity, ask your agent, ask your underwriter where we're at in the cycle. They should be able to tell you what they see in the future. But right now it is an unknown. So what to focus on? This will really lead us into the rest of our presentation. Right now, through the COVID-19, through any type of a dramatic financial impact that we've had right now, such as now, working capital, especially liquidity and cash, are the most important things. But profitability, you need to watch expenses. You need to maintain your profit integrity. Expenses will go up on projects just because of the social distancing requirements that you have, because of other issues with the COVID-19. we're expecting to see increases in expenses. You just watch that and monitor that. Look at other areas within your company that you can cut expenses. Accounts receivable, stay on top of them. Leverage, you want to watch your long-term leverage and your short-term. Contract language, and stay on top of your key partners, your professional relationships. And then if you're a general, the owner and the subcontractor. If you're the subcontractor, the general and the owner. You want to stay on top of all those relationships. Know where they're at. Know what's going on with them, because what's going on with them could be impacting you. As far as the financial considerations, cash flow versus working capital, and then profitability. As I said, near-term cash flow is the most important. Working capital is important, but knowing that you have the cash on hand, the liquidity on hand, is going to be really critical over the next several months. Know your cash flow needs. Know them 30, 60, 90, 180 days out. Stress test them. Rule of thumb is to have at least 6 months of cash as a baseline. You should be above that. If you're below that, you want to look to improve. If you're above that, don't hold your head on your laurels. You want to continue to work at that and continue to make sure that you stay on top of that. Know what your cash needs are out as far as you can, and then plan for them. Because new work is going to require cash. You may be able to cash flow it with the project, but you can't count on that. You may see increases on current work. As I mentioned with social distancing, with COVID-19, but also with your supply chain. Watch what happens with that. That you may see increases in costs there. You want to turn all those current assets into cash as quickly as possible. If you had the Paycheck Protection Program, you should know that the legislation increased from 8 weeks to 24 weeks, the loan forgiveness period. The legislature truly wanted to make most of that into grants as much as they could. So that was one of the reasons why they did that. There were some businesses that needed the money, but they needed the money for more down the road. They weren't able to start using it now. In construction, as an essential business, you may not have needed it today, but you're going to be impacted. You're going to be impacted in the third, fourth quarter, and into next year. So that money will be needed. Don't look at it that you're just spending it and it's all fine and it's gone. That's great. You still need to monitor the rest of your expenses and make sure that you don't have any issues with that. The Workers' Compensation Class Code 0012, State of Wisconsin, put this into place for furloughed employees. If you have furloughed employees, maintain records of what they're being paid. You are then going to be putting them in that class code, and that class code has a 0.00 charge for it. So that will be a savings on your workers' compensation. If you have seen a reduction in your payrolls, have seen a reduction in the work that you're doing, you may want to look at adjusting your premiums. Go midterm and take a reduction, take the savings now, get the cash in hand now. Better to have it now when you may need it, and then to wait on it when you get the audit, and then 90 days after that. Monitor your expenses very closely. Revise your budget. At Houseman Johnson, we did our budget as most businesses do going into the calendar year, and we have had several different revisions of the budget over the last few months with our what we call COVID-19 budget. You want to make sure that you stay on top of that, monitor what changes are happening, document the changes, and then incorporate them into your financial projections. And then keep track of financial impacts you're having with projects, additional PPE, social distancing, and as I mentioned, the supply chain disruptions and cost increases. Accounts receivables. Stay on top of these as diligent as possible and stay on top of these as best you can. Over 30 days, you want to be on the horn asking when it's coming in. Yeah, I know that a lot of generals will hold the monies for 45, 60 days, but you want to stay on top of it. You don't want to let it linger. The longer it lingers, the worse it could be, because you don't know what other issues they're being faced with. When the money is paid to them, you want to be paid. When the owner, when you put the money in as a general contractor to the owner, you want to be paid. You want to make sure that you stay on top of that. Contracts are becoming a little bit more different now too. Make sure you look in all the language, because we're finding that they're slipping in different places, different clauses with the COVID-19 that are putting you on the hook for any future suspensions, delays, or cancellations. It'll be your cost. You won't be able to increase your any charge to them with an increases in cost because of delays that were put on. Force majeure has become a big discussion point over the last 60 days, where prior to that, nobody really looked at that clause. You want to know what triggers it and what recourse you have as a general contractor or subcontractor if something does go wrong. And then what amount of their loan is for hard costs versus soft costs. You want to know how much you're going to get paid. Make sure you're on top of the loan, that the money that's out there for the project. If the money is for soft costs, you want to know what that is, because you see the total loan amount, and that takes away from the total loan amount. If you're on a project and you're getting change orders and adding up, and you're now going to be over what the hard cost loan amount is, you want to know where the funds are coming from, because when you go to get your last payment and the retainage is the worst time to find it out. Going back to 2008 and 2010, the banks frequently did something which at that time had not been done, but they had their construction loan. Say it was $1 million construction loan. Through change orders, it went up to be $1,250,000. The owner of the project, in years past, would then just turn it over to the permanent financing, and they would increase the permanent financing, handle that with the final billing and the pay off the retainage. Everyone's happy. Back in that era, banks were a little bit more under the thumb of the regulators, and when they got to that $1 million, went to permanent financing. They said, no, we only agreed to $1 million. That $250,000 is off on you. Well, where's that money going to come from? So if you go back to those days again, as I said, you just want to make sure you're diligent on what you're going to be able to collect for the under the loan, and then because if there's enough, is there enough room for the change orders? If no, all is going to be funded, and tread cautiously. The subcontractor is a general contractor bonded on a project. If no, get the details of the funding for the project. They should have that already. And what are the terms with the owner? You want to know that. And then lastly, I have on here trade credit. There's an insurance policy out there that you can purchase. It's not been purchased on a wide variety, but it is available. A little bit tougher now, but it is trade credit, and it provides credit coverage for your accounts receivables. Something that you may want to explore, may have an interest in checking into. If you're doing a lot of private work, you would have much more of an interest in that than if you had public work, unless you're in Illinois, of course. But other than that, you just want to stay on top of your receivables. Watch your spending. If you don't need it, don't buy it. We have gone through all of our discretionary expenditures at Hausman Johnson, and we've really determined, do we need to spend this? If not, let's hold back this year. That doesn't mean we won't go back into it next year, but we know that we're going to be impacted because our clients are going to be impacted. We just don't know when, and we want to be prepared for ourselves with cash. So I just pass that on to you, that if you don't need it, don't buy it. Evaluate your entire fleet and equipment. Can you extend the life through repairs and maintenance versus purchasing new? Look at the renting versus leasing versus purchasing options. Renting is more short-term, leasing can be a little bit longer term, and then purchasing is forever. But just know that if you can rent it, That's the easiest in and out. Leasing is the second easiest, and then purchasing, no, you're at the mercy of whatever, if you need to get rid of it, whatever the market bears to sell it. If you have equipment you don't need, you infrequently use, or you can rent or lease it more cheaply, you may want to consider selling off that equipment. It doesn't do you any good sitting in your yard. Manufacturers always make new equipment. You can always buy it later if you need it. But if you are looking for ways to generate cash, that may be one area that you might be able to do it pretty quickly and easily. And then be careful when you're assuming long-term debt. Debt in and of itself is not a bad thing. Too much debt is. It can bear you down. And then when we get into credit crises, and I'm not saying we're in a credit crisis now, but we could be. We don't know where this is going to be headed. What impact will this have on the banking industry? We know that there are some of our clients that have already gone out of business, not in the construction area, but in other areas. Some of these had loans with banks that now they are going to either be turning back if they can or defaulting on. What then impact will that have on the credit industry? Watch your covenants. Will the Fed start tightening on private lending like they did back in 2008 through 2010? Just some things to be aware of, and know that, in the past, covenants you may have been able to blow through. Now it may be a different story. We just don't know where it's going from the credit, but just be aware and monitor how your banks are acting and reacting to things. Review your line of credit needs. You may want to consider converting a portion of your working capital line of credit to long-term debt. If you do not get out of your working capital line of credit at all during the year, if you cannot put it at rest, that typically means that you're undercapitalized. So if you're undercapitalized, one way to help support an undercapitalized company is long-term debt. The reason why I say consider converting a portion of that to long-term debt, short-term or working capital line of credit debt is a callable debt. The bank can call it at any time. Companies have gone out of business with a decent equity, but they've had no cash flow. They've been in a negative cash flow, haven't been able to generate cash because the banks have called their lines of credit. Companies have been able to operate for years and years and years with a deficit equity because they've been able to manage their cash flow and live off of their line of credit. You want to be concerned, though, if a bank can call all of your debt. And that's why I just say if you term some of that out, then they've got skin in the game to make sure that your future is preserved, and they don't look at you as just a way to get the cash as quickly as they can. If you see a cash pinch coming in the future, you want to negotiate today with the bank. Be ahead of the game. Right now, lending is still favorable. Terms are probably as low as you're going to see. But as we saw with the PPP loans when they went through, the banks got backed up pretty quickly. There's still a backlog and a logjam on there, but it's still the best time to ask for money if you need it. Just be prepared. You don't want to ask for it when you absolutely need it. Then it's too late. If the banks have tightened at that time, you may not be able to get it. You want to be able to get it on your terms and at the time when you don't need it is the best to ask for it. And then keep as much cash in your company. Watch your distributions and profit sharing as closely as possible. Limit the amount of money. If you have taken excess distributions in the past, you may want to revisit that for the coming year and look at just taking it out for taxes. Avoid having officer, shareholder, or employee receivables. Understand that bond companies typically will take that out of your working capital and out of your equity in their analysis to determine your backlog, the backlog that they would provide. So in the past, it wasn't as great of a deal, but with cash flow needs as great as they are, it's something to consider. And as I said, which expenses can you defer and which ones can you cancel? Consider doing it if you can.
All right. The next few slides incorporate what Pat was talking about with how your cash flow works, how do you maximize your cash flow. The slides I'm going over here were provided by a CPA firm we do work with. They give us a template for a general contractor and a template for a subcontractor. These slides are very important, and they're in the back of, if you have a review done on your financial or an audit, these are in the back of your financial statement. And a lot of times people just kind of gloss over these and don't pay attention to them. This gives the surety and a banker, whoever's reviewing your financial, a real hard look at how your firm is performing. And one of the things, if you look in the middle of the slide, it talks about unallocated indirect construction costs. If we go to the next slide here, and you see this is for a general contractor. And when you say indirects to people, that means something different to every construction firm. And it differs between what type of contractor you are. If you're a plumbing contractor, electrical, if you're a heavy equipment contractor. This slide can vary differently for all those tremendously. And what we're going to get at here is, let's look at vehicles and equipment. So in this scenario, most contractors will have a sophisticated accounting system that their equipment rates charge into jobs. And this will then provide the contractor with, how am I working? Am I working at full utilization or am I underutilized? It's important to have a handle on your indirect rate. And as we slow down, or if we slow down, you're going to be underallocated into your jobs. And that is what things that Pat talked about. Do you have the right equipment fleet? Are you monitoring your equipment fleet? This is what will give you answers to if I should sell a portable crusher. Do I have too many haul trucks? Do I have too many excavators? Or do we modify our fleet? Do we sell off this equipment and keep our newer equipment because of repairs and maintenance? So the indirect captures a lot of the other things that aren't out there. So for instance, like a plumbing contractor, you have so many vans, you have all these small tools. How are you capturing those costs in your job? Do you have a developed indirect rate that you can rely on and get it into jobs? Does your estimating department and your accounting department, are they on the same page with their rates? I can't tell you how many times I've went into a contractor and their estimating department has one set of rates and their accounting department have a different set of rates. You got to get both departments on the same page with those rates. Now we get back to, if we go to, let's skip ahead here, let's go to the next slide, the subcontractor. One of the things on the subcontractor slide is too, are you capturing a thing that people don't think about, their shop and yard? Do you have a developed rate to get that into jobs? And in this, well, it's again, in this scenario, you can see that they're allocating their shop and yard into their jobs properly here. They're a little underallocated. But if we go into a downturn, this whole schedule will let you know if you have too many people in the shop, etc. And then we go down to vehicles and equipment, repairs and maintenance. How are you capturing those expenses? So those are all things that are indirects that aren't directly charged into jobs. What people get concerned about when I talk about this is they say, well, if I raise these rates, I might not get any work. Well, that's not necessarily true. because you've been bidding, and if you're bidding in the public market, you know where you are at bidding into your peers. And what this is just giving you is a better tool to analyze your company and to see where you're going. How can you control your rates? And you just get a system in place. Monitor your rates quarterly. Some people monitor them monthly. And I have electrical contractors, plumbing contractors that look at this rate annually. And at the end of the year, they always want to know, hey, where's my indirect rate? It's their lifeline because they know how this rate tells them how they are functioning as a company in terms of, are they getting more out of their guys than they would normally get, or are they have way too many vans and are not utilizing them. And so people will retool their fleet at the end of the year.
Okay, now we're going to go into project considerations and your current backlog. As I mentioned, you want to stay on top of projects that may be delayed, suspended, or canceled. I've heard some local projects. I do know of some that are up in some of the areas like the Dells, where the local economy is so dependent upon the revenues generated from tourists and their concerns about the lack of tourists this year. They've already suspended projects that were underway. So you just want to stay on top of that and be honest with yourself. What risks could there be with some of our work going or being stopped at any point in time? But know your contracts and know what happens at that point in time. If there is a stoppage, if there's a delay, if there's force majeure, what is your exposure? How's enforced? What's your recourse? What can you come back with? Supply chain concerns. Haven't had as much of an issue year to date, but the expectation is it's coming. If you're getting material from overseas, is there going to be a disruption? If you're getting it from Italy, well, we know Italy's been was shut down for longer than us as the whole country. So what happens with the material you were hoping to get? What impact will that have with delays on your project? What abilities will you have, and will liquidated damages come into play? Just things that you should be looking at. And our manufacturers operating at a reduced or no capacity in some of their facilities, and then their inventory is dwindling. What happens when their inventory is out? Those are the concerns that you need to be on top of and asking your suppliers on a regular basis to make sure that what you need, you're going to be getting. Are there any problem subs that you have out there? Evaluate and manage your trade partners, all of your subs and your suppliers. You don't know what is going on with their other work that they're doing, what impacts they've had. They may have some projects that they've lost because of this, and you don't realize that, and that'll have a negative impact on their balance sheet. Just be aware that there can be things outside of your purview or outside of your control that could bring a negative to them. Loss of productivity with COVID-19, social distancing, fewer employees working. Some may not be able to work now because they don't have a place for their kids and need to stay at home and help take care of their kids. Some have enjoyed working from home and may not want to come back to work. They want to continue to work from home. Is that doable or not? The construction area, it's not. So it's just some things that you have to be concerned about. And then what happens if there is another COVID-19 outbreak? Will construction continue to be treated as an essential business, or will they shut us down? Will other employees balk about working because of that? Future work, as I mentioned, understand the contract clauses and look for really unique ones that are coming in. Watch for the onerous clauses, the killer clauses, the clauses that you may not think you would ever see come into play, but in this day and age now have. Just be very careful. Watch the milestones. Make sure you're making the milestones. And then, again, watch the construction loan covenants, making sure that there's no problems there. Employees, make sure that you have enough employees. Make yourself attractive to try and dip into that employee pool that is out there. This is a chance for you to be able to look at your whole employee base and say, hey, we may be able to upgrade in certain positions as well. I mean, there are some good people that are out there, and you may be able to find some quality people. Just be able to be honest with yourself and do the lifeboat drill.
Yeah, this is a real important time to evaluate your project managers and estimators, because there could be some major opportunity to retool those people and get someone out there that maybe got laid off at a different firm, and it's better than what you have. You need to be very proactive on this. And even talk to your accounting department about your project managers and estimators, because you might find out that some of them, aren't so reluctant to get everything charged into their jobs. It's a great time to see who you have that's the cream of the crop in your company.
And then the project funding, we went through this, but it falls under both the financial and project considerations. Just make sure that, I put it here again because I want to emphasize it. It's critical in this day and age. So take advantage of the future. Construction, as I mentioned, is an essential business. It's going to be looked at as one of the ones to boost our economy. Can absorb the unemployment. There's capacity out there. Contractors have been wanting the work. They just have had the governor of the lack of employees holding them back. We can look and we may be able to do something about that. Focus on your balance sheet. Make sure that you improve your balance sheet. It has improved, but stay on top of that. This is a chance to get rid of some of the fat that's been in the organization. You want to make sure that you are on top of all of that, and then watch your debt. Watch what comes with the Phase 4 of the COVID relief packages. Stay on top of that. Talk to your senators, your congressmen. Make sure that you're getting your point of view out there, things that can help our industries flourish and what we need. And emphasize the fact that you are in an industry that can help with the unemployment. And then, as I said, the Fed's looking to jumpstart the recovery. I think it's going to start with the construction industry in a large way. So make sure you take advantage of that. We know the federal government's going to have to lead the recovery. Private work, we don't know. It's still an unknown. I have heard differing things across the board, that some private owners are taking a wait and see. Some are saying they're not going to do it. They don't need to expand. Some are saying that, well, our employees now like working from home. We don't have the huge, big facility need that we have in the past. Just be in communication with your private owner, the private owners you work with, and make sure you know where they are. Don't get overstretched from both office management, equipment, and financially. Supply chain issues down the road, stay on top of them. Make sure you are aware and on top of where the bottleneck could be in your project with the supply. If it's on a critical path, you need to be on top of that and stay on top of it. If it's international, you need to make sure that it can be coming in. If it's coming from China, who knows what's going to happen with the trade between China and the United States. Maintain your focus on cash flow. Make a nice backlog mix. It's always important to stay on top of if you do primarily private work, make sure you know what it takes to get public work. Be active in the public bid market, because if the private work dries up, your only source of business is public. You don't want to just start finding out now what it takes to get work. Margins are lower. If you're strictly in the public market, you may want to look and try and jump in and get some of that private work too. It's going to be awfully tough, but you want to get as much of a backlog mix as you can, and watch out for subcontractor default. For general contractors and for project owners, that's probably the biggest risk right now is subcontractor default. They're further away from the money. As I mentioned, cash is king. Cash is something to watch. They're further away from the cash. Risk management, insurance keys. Cash flow improvement, the risk transfer can help in that regard. Know your contract, have contract reviews, negotiate, talk with your insurance agent and make sure that if there is risk transfer available, you know what it is and what how it can help you and what the cost is. Pass on that risk when you can. You've got then you've got a finite amount that you're paying for it. You know what the cost is. Look at the return or the retained versus transferred risk, and do your contractor partnership reviews. As I said, the immediacy is focused on survival, and then from the survival we can take off into the future. Stay nimble. Watch the cash crunches. Do your stress test. Be prepared to take advantage of the recovery, but to do that, you have to make sure that you've got the cash to do that. Know your strengths, know your advantages. It's going to be more important than ever when you're competing against others to know where your strengths are. How do you match up against them? We've talked about most of this already. So communication is critical. You want to communicate to all your key partners, to the owners you work with, the subcontractors you deal with, the general contractors you deal with, your employees, your bankers, your sureties, your owners, your suppliers, your subcontractors, everybody. You want to make sure that it's one real tight-knit group and you're all on the same page and everybody knows where everyone else is at, what the risks are for everyone. Watch out for where the cash demands are coming from. As I mentioned, supply chain concerns. Too much too soon. That in any industry, if you take on too much work at one point in time, that can be the one thing that bogs you down and prevents you from actually succeeding. Economic upheaval, we don't know what's going to happen next. We don't know what's going to happen, what the impact is going to be for private owners. We know there's going to be an impact with public owners. And then we know that there's going to be an expected downturn in the economy. What impact will all the civil unrest have? And then the 2020 elections, those are things that you need to just keep an eye on how it impacts the construction industry. Economic, we talked about the stock market turbulence, private owners taking wait and see. Bankruptcies are starting to tick up. If you do a lot of hotel entertainment type projects, well, we know that those industries have been hit pretty hard. Hertz just filed bankruptcy. I mean, who would have seen that coming going into 2020? So it doesn't just affect the small people. Just know who you're working for. Know what they're up against.
And I can't stress enough, and Pat has mentioned it a couple times, ask the question, if you are on a private job, is there funding for this job? Try to get a copy of the funding agreement or the bank agreement. It's only one question, and it could save you a lot of money.
Government, I've got 2020 elections. The election year usually is a tighter year in construction because private owners are waiting to see what happens with where they want to invest their money. Public owners are usually holding, they bid early and then they sort of hold off, waiting to see what happens. What's going to happen with tax policy in this election? And then we know that there's going to be public budget decreases. Political, additional shutdowns. When I say shutdowns, I mean the stay-at-home orders. Civil unrest, growing divide between the two major parties. Can they come to an agreement on the fourth package? Can they come to an agreement on anything right now? Who knows? I mean, it is probably as bad as I've ever seen it, and unfortunately that affects all of us. International, the U.S.-China relationship, and actually China and everybody's relationship right now. What happens there? Are we looking at a war between, I saw China and India as a potential war, and I was like, whoa. Just things that you need to be looking at because they're going to have an impact on our economy, whatever happens. Instability abounds. Just be prepared for it. Are we going to have more tariffs with China throughout all this and the supply chain disruptions? Maintain your balance sheet strength. Can't emphasize that enough. With cash is king. We are an aging workforce. continuity, no continuity both from an ownership, from a management, from a project management, from an employee retention. Know all your people, know where they are, know where they're at in their cycle of work, because that's the thing that can really hurt you. You need to retain your good people, but now's the time that you can add some key people. Know and communicate your business plan both internally and externally. It will help you in the long run that everybody is on the same page, that you have all the same people marching in the same direction, believing that they're all working for the same purpose, and understand the needs of your business partners. This slide I've always thought was a good one. It really encapsulizes what I think is one of the most important things. Surround yourself by your professional relationships and use those professional relationships. Ask them what they're seeing. Ask them what you should be doing to protect yourself. Ask them what you can do to make yourself better. Each one of these will have a different perspective. I have a few clients that will have us all in the same room. That is really powerful. They tell us what their year is looking like, and then they ask us, and playing off of each other, it really can help you in the long run. And with that, if there are any questions.
Great. Thank you so much for the great information, Pat and Dave. If you do have any questions at this time, please go ahead and type them into the questions feature of the GoToWebinar. We do have a couple of minutes left to answer any questions. We will give you a minute to type them in. While we're doing that, I will pull up Pat and Dave's information for you. If you do think of a question after the webinar concludes, please don't hesitate to reach out to them. They'd be happy to answer any of your questions related to today's information. I don't see any questions coming through, so with that, we will go ahead and wrap up the webinar. We want to thank you so much for attending, and we want to thank Pat and Dave again for sharing their time and their knowledge with us. A reminder, we will be emailing out the recording and the webinar slides within the next day or two. And please remember also to fill out the short survey, as your feedback is very important to us. We also hope you can join us for our next webinar, Better Results from a Better Understanding of Healthcare Data, on July 15th. Thank you so much, and have a great rest of your day.